Your first home is probably the biggest asset you have ever owned. And selling it might seem daunting, especially if you start thinking about capital gains tax. But if you live in the property, I have a solution for you. Hello everybody, Shukri Barbara here from Property Tax Specialist. I'm here to help you navigate the complexity of Australia's property tax regulations. Generally, a property is considered to be capital gains tax asset. This means that when it's sold, Australian taxpayers may be liable to pay tax on all or part of the capital gain. But ATO provides an exemption for a property that is considered your main residence, as long as you meet the necessary criteria. This exemption means that you'll generally have no tax liability on the sale of your main residence. So, in this video, I'm going to show you how the main residence exemption works and how you can go about claiming it. But before I get into it, you should know that this information is intended to be a guide only, providing an overview of general information available to property buyers and investors. This guide is not intended to be an exhaustive source of information and shouldn't be seen to constitute legal, tax or investment advice. You should, where necessary, seek your own advice for any legal, tax or investment issues raised in your affairs. Okay, we now know that the main residence is usually exempt from tax when making a capital gain on its sale. This is because owner-occupiers typically don't produce assessable income from their main residence. So the ATO exempts them from paying capital gains on the sale of their home. But for your property to be considered your main residence, you'll have to show ATO that you've lived in your main residence, you keep your possessions at your main residence, you use the property's address to receive your post, the property's connected utilities are in your name, and you are registered on the electoral roll covering that address. So, establishing it as the main residence. It's important to note that ATO won't be satisfied with just an intention to live in the property. You need to actually occupy it while you own it. Having said that though, there is no minimum period that you must live in the property before it's considered to be your main residence. As long as you meet all the requirements, ATO will consider the property your main residence for capital gains tax purposes. Now, in some cases, there may be a gap between when you purchase a property that is intended to be your main residence and when you actually occupy the property. In this situation, as long as you occupy the property as soon as the cause of the delay no longer exists, then the exemption will most likely be available from the date that you acquired ownership. For example, dealing with sickness or having the property undergo repairs, but not having tenants. In other situations, you might acquire ownership of a property that you intend to live in as your main residence while still owning your existing main residence. This could be because of a delay in the sale of the existing property. In the real world, it's nearly impossible to buy and sell homes on the same date. So, ATO will allow you to treat both properties as your main residence for a period of up to 6 months. The up to 6 months is important here though. You don't automatically get a full 6 months overlap. For example, if you've bought your new home 2 months before selling the old one, the overlap period is only 2 months. Another thing that is important to know about the 6-month period is if it takes longer than 6 months to dispose of the old main residence, you may choose to treat it as the main residence to obtain a full exemption on this sale. But this will likely impact your ability to receive the full exemption on the new main residence when the property is eventually sold at some point in the future. For example, let's say 8 months before selling the old home and you apply the main residence exemption to that sale, you'll need to remember to account for capital gains tax of owning the new home when you come to sell it later on. So that's how the main residence exemption works. Now, when it comes to reporting it on your tax return, many people don't realize that it is an exemption from capital gains tax, not an exemption from actually reporting it. So even if the sale of your main residence is tax-free, you still have to indicate yes in the section of your income tax return that requires you to disclose if a capital gains tax event has happened. ATO will then automatically apply for the exemption if it is satisfied that you have met all the criteria. There's also a way that an investor can use the main residence exemption. It's called the 6-year rule. And I'll discuss this in the coming weeks. So make sure to subscribe to our YouTube channel to see how you could potentially save thousands of dollars. Otherwise, if you think someone would benefit from this video, make sure to share it with them. I hope you found this video helpful. See you next time.